Everybody, Geoff Hyland here with the Hyland Group, eXp Realty in Prescott, Arizona. About to give you your December 2025 market update. Before we dive into that, just want to take a moment and just say happy holidays and Merry Christmas to each and every one of you. We're extremely blessed here on the team to have all of you support us over the years and follow us if you're looking at our videos and everything. So we just want to wish you and yours the best of the holiday season to come. So we're going to run things a little bit differently this month. We're going to look at the charts and then you're going to see that there's some shocking surprises, I would say, for December. And then we're going to take a minute and kind of dive a little bit deeper into that. So let's go ahead and dive into the charts. And if this is the first time that you're looking at this chart basically shows you our current supply relative to demand. So the blue line here represents the active site-built single-family home inventory levels. So it doesn't include things like condos, townhomes. And you can see our market is fairly cyclical. Usually the inventory starts to swell as you go into the spring, summer. Last couple years, it's been lingering at some pretty high levels you can see here. And then the last couple months, we have started to see a trend reversal, which will lead to our lowest market homes on the market January 1st. So last January, 821 total homes. The green line, of course, indicates the number of homes that went under contract in that given month. And the red line is the number of homes that closed escrow. So a couple things, November 1st, we had 1,149 total properties on the market. As of December 1st, we're sitting here at about 1,114 properties on the market. So the inventory has been going down. Now, values is the biggest change that we saw. So I ran these numbers and it kind of caused me to go, wow, what's going on here? So Prescott, month over month, shows 10.43% appreciation. All right, Prescott Valley shows plus 4.45. Chino Valley did have a little bit of a decline, minus 3%, and those average out to an overall 5.84% increase. Now, if I'm talking to your average seller in our marketplace right now, they would not tell you that last month felt like an increase in terms of the market values or even activity, because you can see with 221 pending sales, that's off of the average of about 275. So because of a little bit of diminished pending sales, our absorption rate, which is our monthly supply of listings, went up from, I think it was 4.3 to 5.74 month supply. Again, a 6-month supply is kind of a balanced market. 271 properties came on the market in the month of November, and our days on market went down. So you can see across all municipalities, MLS wide, it went down 17 days. Prescott went down 25 days. PV down 10 and Chino down 1. So the overall time by which it takes to attract an offer on your property for the MLS is 67 days. Those are significant decreases. Prescott coming down 25 days, coupled with these value changes that we're talking about over here. Now, this active inventory still paints a little bit different picture. It's showing 122 days on the market, and that the active average property that's on the market is overpriced by a little over 9%. So we've got some conflicting data here. Number one, the month supply went up, the days on market went down, and the values went up. This is what really caused me to kind of look at, okay, well, what's really causing these numbers? Well, let me tell you these are just some hunches that I had that I tracked down. So why does November look hotter on paper than it really was in November? So I did a couple things. Number one, total closings dropped, okay, by 36% month over month in Prescott. So it went from 150 down to 96 closings in the Prescott zip codes. However, the luxury closings stayed high. So there were 22 compared to 23 in October, but in October there were 150 sales. So there was a lot more data to amortize those luxury closings across. What it means is that 1 in 4 homes that sold in Prescott zip codes were high-end properties. And obviously that's going to drag up the price per square foot, even though the demand was cooling. So if you go back to the charts, demand is cooling. Other than, you see a little bit of a decline in the days on market, That was these luxury properties that entered the market sort of late in the selling season, July, August, September, that then sold. So what I would tell you is that the average buyer, or seller for that matter, say under 900,000, did not experience a price jump in November. The numbers only look higher because the luxury buyers were unusually active and closed in a very high concentration in the month of November. In October, I went back to some data. In October, all Prescott zip codes, 22 of 150 sales were over $1 million, which represents 14.7% luxury share. In November, 23 of 96 were over $1 million, which represents 24%. So confirms kind of a huge month-over-month shift, especially in the luxury market and luxury closings, not quite doubling, but a huge jump in terms of the percentage. And that 24% of luxury share in November is far above the normal for Prescott, which usually hovers around 8 to 12%, not 24%. So to kind of further substantiate this, I went back and looked at Prescott numbers. I pulled out every sale over $1 million going back to June. With the exception of September and October, the average price per square foot of all the closings in Prescott zip codes has been hovering right at about $330 a square foot, $330, $329, $331. The exception would be September and October numbers, which did show an additional downfall to $318 and $311 respectively, and then rebounded right back in November to that $330 range. So if you take out the luxury numbers over the same time period in Prescott Valley, almost the exact same trend was revealed. So that's why the market didn't feel like it was surging, but rather continuing to cool, which is in line with the increased supply and diminished demand. So before you get really excited and you look at those numbers and think, hey, I'm going to call my agent and raise the price of my home that's been sitting on the market, that's my attempt to kind of explain some of the data that we're seeing and why the market was behaving the way that it is. Now, just a couple updates on the lending front and on the interest rate front. A lot of people are calling. I was talking to a buyer yesterday. Hey, Geoff, we're so close to making an offer. Once again, we're going to wait for that Fed announcement that's, the Fed meeting that's coming up on December 10th. I'm going to reiterate some points that I've told a lot of you. The anticipated adjustments that all of the experts are saying that the Fed is going to make, maybe they cut the rate a little bit, all of that is already priced into current lending rates. So right now, rates are hovering right at 6.3%, 6.2, 6.3%. Well-qualified borrowers, we're seeing locks in the sub 6% range. Another thing to keep in mind is, I get a lot of people again saying, hey, we're just going to wait, the speculation for next year. Trump's going to put in a new Fed chair. Well, there's a flip side to that too. If the markets perceive the new Fed chair to be too tied or have allies, then that could also sort of infuse some uncertainty into the markets. And remember that mortgage rates are not tied to the actual rate cuts, okay? So if there's perception that it is not as independent as it should be, that could lead to higher rates. Still, overall general consensus, I was reading in Forbes and The Street earlier this week, general consensus is we're going to see rates soften a little, but none of them are saying that we're going to see rates in the mid fives or anything like that next year. So they're still saying, look, right now, an interest rate in the 6.2, 6.3 range is better than probably 30%. Rates have never been that low for more than 20 to 30% of the time over the last 50 years. What I'm telling you is that the rates right now at 6.2, 6.3, and the sellers that are out there that are still willing to pay some concessions and get you that rate at a lower number, you should take advantage of it because it is a good rate. That's the update for December. I really appreciate you guys tuning in. If you have any further questions, you want to get granular, or if you disagree with me, give me a call. Happy to talk to you. Thanks again. Merry Christmas and happy holidays.